Singapore, a city-state in Southeast Asia with population of only 5.6 million and land area of 734.3 square kilometers. This land area is about 0.9 times the size of New York City. Despite the small size of the country, the Singapore dollar is one of the strongest currencies in the world. Since 2005, the Singapore dollar appreciated against US dollar by 29%. Against its neighboring country Malaysia and Indonesia, the Singapore dollar appreciated by 55% and 128% respectively. To understand why the Singapore dollar is so strong, we have to look at the foundation of its economy. Please stick to the end of the video to find out about the factors contributing to the strength of Singapore dollar and the great risks facing the country. Singapore Economy Overview. Singapore, despite not having many natural resources, has become one of the four Asian tigers, known for their rapid economic growth. Singapore embraced free trade and removed trade barriers and tariffs, allowing it to connect and do business with countries all over the world. This integration with the global economy has played a significant role in Singapore's impressive development. To sustain its export-oriented industrialization, Singapore relies on an extended concept of intermediary trade. It purchases raw materials, refines them, and then re-exports the finished products. This approach is especially evident in industries like wafer fabrication and oil refining. Singapore has one of the world's deepest natural harbors, which allows it to accommodate large vessels and serve as a transshipment hub. Singapore is situated at the southern tip of the Malay Peninsula, providing it with a natural advantage as a maritime gateway to the Southeast Asian region. It is positioned along major shipping routes that connect the Indian Ocean to the Pacific Ocean, making it a critical juncture for international trade. Singapore's strategic port gives it a competitive advantage in carrying out such trade activities, making it a vital hub for international commerce. Singapore's trade-to-GDP ratio, which measures its reliance on trade, is among the highest globally, reaching an impressive 337% in 2022. The Port of Singapore ranks as the second busiest in the world by cargo tonnage and serves as the busiest transshipment port worldwide. External demand significantly contributes to around 70% of Singapore's GDP, highlighting the nation's strong ties to the global market. Singapore boasts the fourth highest GDP per capita in the world, surpassing many countries, including Hong Kong and Japan, making it the top ranked in Asia. Industry. Singapore's economy relies heavily on manufacturing and service, manufacturing contributing 21% to its GDP in 2022. The electronics, precision engineering, energy and chemicals, and aerospace sectors make up 80% of the country's manufacturing output. Singapore is the third largest exporter of semiconductors in the world. It is home to over 20 wafer fabrication facilities. The country produces over 10% of the world's semiconductors. Singapore is the world's second largest oil trading hub, after Rotterdam. In 2022, the country's crude oil trading volume was 1.8 billion barrels, which was about 15% of the global total. It is home to about 600 oil trading companies, which make up about 25% of the global oil trading market. The country is also a prominent global hub for pharmaceuticals, hosting over 60 pharmaceutical companies. The aerospace engineering sector is rapidly growing due to increased air travel in the Asia-Pacific region, strengthening Singapore's position as a leading international aviation hub. In the service sector, the city-state continues to excel as a global financial center for investment banking, wealth management, and asset management. The financial sector accounts for about 15% of GDP. There are over 1,200 financial institutions in the city, including banks, insurers, asset managers, and exchanges. Singapore's financial sector has been ranked as the most competitive in the world by the World Economic Forum. Singapore's ports are vital for global trade. The Port of Singapore is the world's busiest container port. It handles about 14% of the world's container traffic and about 40% of the world's transshipment traffic. Changi Airport, one of the world's busiest, handled over 1.6 million tons of air freight in the same year. It is the world's fifth busiest airport in terms of air freight throughput. The airport is a major hub for e-commerce, handling about 10% of the world's e-commerce air freight. The logistics industry benefits from advanced infrastructure, including free trade zones and well-connected road networks. Changi Airport is also a major hub for air travel in Southeast Asia. In 2022, it was ranked as the best airport in the world for the 7th consecutive year. Foreign investment. Singapore's inward direct investment flows reached $195 billion in 2022, recording an increase of 10% over the previous year. The finance and insurance services sector accounted for 35% of Singapore's inward direct investment flows in 2022. The next largest recipient industries were wholesale and retail trade and manufacturing. The top 5 source economies were the United States, Japan, United Kingdom, Hong Kong, and mainland China. Collectively, they accounted for 45% of Singapore's total inward direct investment flows in 2022. The stock of foreign direct investment in Singapore's corporate sector stood at $2,479 billion as at end 2021, a 15.5% increase from 2020. Foreign direct investment has played a significant role in Singapore's economic development, helping to boost the country's productivity and strength of the Singapore dollar. Strong financial positions and foreign reserve. As of 2023, Singapore's total assets, including GIC and Temasek assets, are estimated to be around $1.8 trillion. This includes the country's foreign reserve, which is managed by the Monetary Authority of Singapore, as well as the assets held by GIC and Temasek. GIC is a sovereign wealth fund that invests the country's surpluses and reserves, while Temasek is a holding company that invests in a wide range of assets, including companies, real estate, and infrastructure. The assets of GIC and Temasek are managed for the purpose of generating long-term returns, while the foreign reserve is managed for the purpose of providing a buffer against external shocks. Singapore's foreign reserve is the country's official holdings of foreign currencies, gold, and other assets. The Monetary Authority of Singapore manages the country's foreign reserve. The main purpose of the foreign reserve is to provide a buffer against external shocks, such as a sudden decline in the value of the Singapore dollar. The foreign reserve can also be used to support the Singapore dollar in the foreign exchange market. Singapore's foreign reserve is one of the largest in the world, with a value of over $317 billion as of June 2023. Singapore's fiscal position. Singapore has had a current account surplus for many years, meaning that the country exports more goods and services than it imports. In 2023, Singapore's current account surplus was $22.1 billion, or 1.7% of GDP. This surplus has been a boon to the Singapore economy. The surplus provides the government with the resources to invest in infrastructure, education, and other areas that will help to sustain economic growth. A fiscal position is the financial situation of a government. It is measured by the government's budget balance, which is the difference between the government's revenue and expenditure. A positive budget balance means that the government is running a surplus, while a negative budget balance means that the government is running a deficit. Singapore has a strong fiscal position. Its consolidated fiscal balance to GDP is around 5% on average from 2012 to 2023. This compares favorably to the average budget deficit of -3.7% of GDP for developed countries. The strong fiscal position supports the strength of Singapore dollar. Political stability. The Singaporean government is known for its prudent fiscal policies, long-term planning, and stability. This instills confidence in investors, encouraging capital inflows that bolster the Singapore dollar's strength. Political stability is another essential factor behind the Singapore dollar's strength. A country's transparent legal system and strong rule of law reduce risks for foreign investors, making Singapore an attractive destination for long-term investments. Singapore is the only country in Asia with an AA sovereign credit rating from all major rating agencies. Tax haven. Singapore has a low corporate tax rate, no capital gains tax, and no inheritance tax. It also has a strong banking secrecy law. Singapore is a tax haven for the wealthy due to its low tax rates on personal income and tax exemptions on foreign-based income and capital gains. Many billionaires choose to live in Singapore, such as Australian billionaire Brett Blundy and Facebook co-founder Eduardo Saverin. Risks. As Singapore navigates through the ever-changing global economic landscape, certain factors pose potential challenges to the country and its currency's resilience. As a small and trade-dependent nation, Singapore is susceptible to geopolitical tensions. Any escalation in regional conflicts or trade disruptions could negatively impact the country's trade and investment flows, putting downward pressure on the Singapore dollar. Singapore is highly dependent on trade with China. China is Singapore's largest trading partner, accounting for about 13% of the country's total trade. As a result, slowdown in the China economy is likely to have a significant impact on the Singapore dollar. However, an important long-term challenge for the Singapore economy will be from aging demographics. With Singapore having one of the world's fastest aging populations, the proportion of Singapore's population that is currently aged over 65 years is 1/6 of the population, but this will rise to an estimated 1/4 by 2030. This will result in rising healthcare and social welfare costs and could gradually reduce Singapore's long-term potential growth rate. Immigration could address the aging demographics, but integrating immigrants into the existing society can be a complex process. Cultural differences, language barriers, and social norms may create tensions in fostering a cohesive and harmonious community. In the worst-case scenario, in the medium or longer term, this may affect the political landscape and stability of the nation. Throughout history, small countries have often found themselves in vulnerable positions due to their size and limited resources. Their constrained geopolitical influence and economic power often lead to challenging choices that can significantly impact their future. Looking forward, Singapore must carefully consider the decisions in the face of geopolitical complexities. Striking a delicate balance between national interests and international relations is crucial for safeguarding Singapore's future prosperity. The room for error is significantly narrower for a small nation like Singapore, where the fallout from poor choices can be disproportionately severe. The decisions today will have a profound impact on the future of generations to come. A single misstep in foreign policy or mismanagement of geopolitical tensions could cast a long shadow on the nation's future. Please leave your thoughts on the future of Singapore and Singapore dollar in the comments section, and thank you for watching.